Hello everyone, thank you so much for joining me for another new Finance Mortgage Accelerator video. Today we're going to be discussing why you should stop processing your own loans. So let's get into it. All right, so before we talk about exactly why we should stop processing loans, I want to discuss a little bit about what actually makes us money in our business. Well, the short answer is originating loans. So it is in the origination of loans that is where we make our money. So if we aren't originating, we aren't making money. There's no revenue coming into the business. Now let's break down what tasks that we are doing to originate loans in our business. Well, the first task is sourcing deals. So that's going out and finding borrowers directly. The second task is creating referral partnerships and fostering those partnerships so that we could get more deals. The third task is selling term sheets. So that's where we go out and we sell the terms to a scenario that's come into us. We've talked to a borrower, we sell the terms, we get the borrower to sign on the dotted line. The fourth task is managing the borrower's expectations and emotions throughout the sales process. Even though this might not seem like an origination task, it certainly is, because if you aren't managing your borrower's emotions and expectations, there's no origination that's going to take place. Your deal is going to fall apart. And then finally, there's training and recruiting more brokers. So, this is clearly a part of your origination tasks, building up more sales for your business by replicating yourself in your firm. Now, one big mistake, probably one of the biggest mistakes people make when they first start their commercial mortgage brokerage. Maybe it's good to do this at the beginning, but as time progresses, you really need to hire a processor. So, what happens is they don't outsource the administrative work within their business. So, you are still doing your processing on your loans. You're still handling your entity docs, you're still doing all the administrative work. So, we're going to talk about what it looks like to actually process a loan now so you can get a perspective of why you shouldn't be processing your own loans. Well, first off, just quick definition: the act of processing a loan is the act of collecting documents and fulfilling underwriting conditions in order to get the deal funded. So, when someone's processing loans, what they're doing is they're reaching out to the borrower to collect like IDs, taxes, escrow deposits, things like that. They're also reaching out to the hazard insurance company, so your liability insurance. So they're reaching out to that company, making sure the proper coverages are in place. The processor's job is also to reach out to title to make sure we have the right title requirements. And then going out and getting the right entity documents. So, a lot of borrowers have attorneys who handle their entity documents. So, fulfilling entity requirements for the lenders. And the list might go on and on. There might be letters of explanations needed from roommates or what have you. It's all about just fulfilling the underwriting conditions to get the deal done. Now, as you can see, there's a lot going on here, and there's a lot of people that you need to talk to, and there's going to be a lot of time spent processing a loan. Now, let's look at if we were to hire a processor versus if we were to process our own loans. Well, if you were to hire a processor, the neat thing is processors work on commission, just like you work on commission in originating loans. Now, if the deal doesn't fund, the processor doesn't get paid. And so, for you to process your own loan makes absolutely no sense when you could hire a processor who also has the same stake in the game. If the loan doesn't fund, then you don't have to pay them. So there's virtually no risk in hiring a processor because they don't get paid unless the deal gets done, just like you don't get paid if the deal doesn't get done. Now, the second huge reason you should be hiring a processor is that you can charge the client the processing fee. So let's just say you pay your processor 695 or maybe 895. You can pass that processing fee on to the client. However, if you were processing your own loans, like I see a lot of my brokers doing, they actually don't end up charging the client any processing fee at all. Now, what the bad thing about that is if you're processing the loan, you're putting in all this extra work. However, you're only going to be getting paid the origination that's on the file. So maybe 1, 2, 3 points origination, and you're not paying yourself for processing that loan. That's a problem. You should be getting paid more if you're processing the file. The third biggest reason you should be hiring a processor is you can 1099 them. So you actually don't have to even hire anybody internally. You don't have to go through the process of hiring a W 2 employee. You could just 1099 someone, which is a huge tax write off. Now, if you're not hiring a processor, you're doing this yourself, there's no write off incentives here. So So there's just no reason you shouldn't be hiring a processor in this case. Now, if you don't hire a processor, there's an opportunity cost taking place. So by not hiring a processor, ultimately 50% of your time is going to be spent processing these loans, reaching out to title insurance and all that. So you're missing out on 50% of potential revenue in your business. So to illustrate this, I want to just show you a couple quick graphs. So we have our cyclical growth curve and then we have our exponential growth curve. And you can imagine exactly which person is on the cyclical growth pattern versus your exponential growth pattern. Your person who has an exponential growth is doing 100% origination. All they're doing is sourcing borrowers, creating referral partnerships, managing those borrowers' emotions to make sure the files go through, and recruiting and training more brokers. This is what your growth curve should look like. But if you are caught up processing your own loans and originating, this is what you probably see already. You're seeing a lot of business. So you get a lot of business through the door, and then everything kind of slows because you have to process loans. And then you get a lot of business, and then you have to process loans. So there are all these lulls. Sure, you might be growing, but the growth curve isn't nearly as strong as it could be if you hired a processor. Because guess what? If you hired a processor, these lulls would go away. The processor would be handling all the processing, the slow part of your work, while you could spend all your time replicating yourself, building up more referral partnerships, and making sure more deals actually fund. Well, I want to thank you so much for joining me for this video. If you haven't already done so, obviously hit the subscribe button and notification bell. And if you haven't checked it out, we do have a mortgage accelerator that we dropped this last year. If you use this promo code STOP-processing, so just word for word what you see here, you will get 75% off that course. And all you got to do is just scan this tag that you see on the screen, and it will take you straight to the course. So I hope you enjoyed this. By the way, there's only 10 of those discounts going out, so the first 10 people use that code actually get the discount. I want to thank you again so much for joining me for another new finance mortgage accelerator video. We'll see you in the next vid.